Okay, so I want to welcome everybody to today's webinar on Iowa and South Dakota tax issues for construction contractors. My name is Valen Reinick, and I'll be serving as today's webinar moderator. I'm with Iowa SourceLink and the UNI Center for Business Growth and Innovation. A few items before we kick off today's presentation. We do record all of our webinars, and we make them available on Iowa SourceLink usually within the next week of the presentation. As you've all noticed, there's a public comments box. Please use that to interact or share something with the group. If we encounter technical difficulties and get disconnected, please use the same link that you used to get in to re-access the webinar. Chelsea Morrison will be our technical support lead today and can also work with you one-on-one if you encounter any of those difficulties. She's going to type her name into the box, her number. In the lower right-hand corner, there is a different box for questions and answers. We're going to try to answer as many of those as we can after the presentation. So just make sure you indicate who the question is for, either Iowa, South Dakota, or both. We have a really great webinar for you all today. Our guest speakers are Terry O'Neill with the Iowa Department of Revenue and Adam Maska with the South Dakota Department of Revenue. Today, they'll be sharing information about tax issues related to the construction industry. Just a little bit about our speakers before we begin. Terry started with the Iowa Department of Revenue in 1987 as a summer intern working to find non-registered businesses. In the fall of 1987, he became a revenue agent collecting past due taxes in the Davenport area. In 1990, he became a taxpayer service specialist. As a TSS, he assists taxpayers by email and phone on a wide variety of Iowa tax issues. In addition, Terry is a primary presenter for other educational outreach efforts of the department, such as webinars. Adam has been with the South Dakota Department of Revenue since 2012. Adam is a field territory agent in the Yankton office that works with tax discovery, compliance, collections, sales tax, and contractors, excise tax, licensing, and reviews. Adam's territory focus is Clay, Union, Turner, and Hutchinson counties in southeastern South Dakota, including North Sioux City and Dakota Dunes areas. So with that, welcome everybody, and I'll let Terry get started.
Alrighty, thank you, Valen. We're going to start out first, as Valen said, Iowa is going to provide the information first, and then Adam is going to provide information for South Dakota. So we'll start out with Iowa. First of all, just a little bit of definition for you. What is a construction contract? And basically, we have a simple definition of a construction contract. It's an agreement to provide labor and materials to build a structure. So let's say you were going to build a house and you hired a contractor to do that. They're going to supply the labor, they're going to supply the materials, and they are going to construct a house for you. This can be anybody. This can be any type of a business entity. This can be a general contractor, a subcontractor, builder. We don't care what kind of title you are placing on yourself. We also don't care what kind of entity you are. If you are supplying labor and materials to build something, that is a construction contract. In Iowa, we have 4 different types of entities that you can be as far as a construction contractor type of business. First of all, we have a contractor. Second is a contractor retailer. Third is a repair company. And the fourth one is a manufacturer contractor. Now we're going to spend a little bit of time, we're going to talk about each of these and tell you the tax consequences of each one of these types of entities. Does it make a difference? You bet it does. We're going to look at the various things that you do. What is your primary reason for being in business? Are you primarily engaged in contracting type of work? Or do you make retail sales? Do you do some of both? Or do you just make repairs? You're going to have to pick one of those 4 statuses because that's going to tell the rules that you're going to play by, so to speak, for handling your Iowa tax responsibilities. So let's move on. What's a construction contractor? Well, Iowa law says that a construction contractor is the consumer of all building materials and supplies used in a construction contract. So what does this mean? Well, it means that a construction contractor must pay sales tax on their purchases. Okay? If they are purchasing things in Iowa, they will pay sales tax when they're buying materials and supplies to use in a construction contract. If you are purchasing materials from out of state and they are being delivered in here into Iowa, you're going to end up paying use tax to the Department of Revenue. So again, construction contractor, final consumer of building materials, must pay tax. That's a construction contractor. Construction contractors might get involved in various types of work. If they do new construction type of work, again, they must pay tax on their cost of materials at the time of purchase. When they do the construction contract work, they do not collect any tax from their customers. So what am I saying here? Well, when a contractor purchases materials, and I'm from Scott County over in eastern Iowa, and the sales tax rate in Scott County is 7%. So when a contractor is purchasing materials, they deliver them, they take delivery in Scott County, they're going to pay the cost of materials plus 7%. They need to make sure they incorporate that tax as part of their cost when they're bidding a job. So make sure that you take that into account when you are bidding on a construction job. Construction contractors also may perform some taxable services. Okay? Stepping back again, when you're doing taxable service type of work, you still must pay tax on the cost of materials at the time of purchase. When you perform the taxable services or repair types of services, you're going to collect tax on labor and materials from the customer. Now, you might be thinking, wait a minute here, the state of Iowa is getting the money twice. Well, we do have a way to rectify that situation. On the quarterly sales tax return, you can take a deduction, it's not really a credit, a deduction for tax paid on the cost of materials if you itemize out the cost, you itemize out the price of the materials on the invoice to the customer that were used in a repair situation. That does not apply to new construction. It only applies to situations where there's repairs being done or taxable services being performed. Next up, we have a contractor retailer, and this is a dual type of business. Not only are they involved in doing construction contracting, they're also involved in making retail sales as well. Generally speaking, they may have a storefront type of business. They may sell supplies, they may sell materials, and they may also use them in construction contracts. These types of businesses, they frequently make retail sales over the counter. So if you were a homeowner and you wanted to do a project at home, you went to one of these types of businesses and you made a purchase of the materials, that is a retail sale, and you'll pay tax on it. These types of businesses also may make sales to other contractors. They may sell different building materials to contractors. Again, they also may do some contracting work as well. They may do some construction and build something. These types of businesses must have a sales tax permit, and they've got to collect and remit Iowa tax accordingly. When they make retail sales, they collect tax from the customer on the sale. When they go out and they do some taxable repair work, they're going to collect tax from taxable customers on labor and materials. When they use materials in a construction contract, they're going to owe tax on their cost of those materials. So again, depending on what they do with the materials is going to determine the tax responsibilities for Iowa. Contractor retailers buy items tax-free for resale. If it's something that's going to be put into inventory, what they need to do is provide a sales tax exemption certificate. And this is I just have the top portion here on the slide. This is a blank form that you can get off of our website. I'll give you the website information here in a little while. But a sales tax exemption certificate is a documentation that the purchaser claiming exemption from Iowa tax fills out, completes, and gives to the supplier. The supplier then keeps these exemption certificates on file in case they're ever audited by the department. That is their documentation as to why they did not tax the customer in this situation. Contractor retailers, they have to pay tax to their suppliers if they're buying materials for a job, a construction project, and they are not placing them in inventory. So they've got to pay tax in that situation to their vendors. If they have the material in inventory, they owe the tax to the department when they remove those materials from inventory. Contractor retailers, they collect sales tax from customers when, again, they make sales without installation, when they make simply retail sales. They also collect tax from the customers when they perform taxable services or repairs. They're going to charge tax to the customer, assuming that customer is not exempt for some reason, on labor and materials. They don't collect any tax or remit any tax to the department when they're performing a construction contract. As I've mentioned before, materials that are withdrawn from inventory for use in a construction contract, if it's in Iowa, they're going to owe Iowa tax on it. If they take those materials outside of Iowa, they do not owe Iowa tax. So if you're with me on that, if you are a contractor retailer, you are located here in Iowa, you've got inventory here in Iowa, you can withdraw that inventory, the material from inventory, take it over to another state like South Dakota and use it in a construction contract. There's no liability to Iowa. Now, Adam's probably got some liability to talk about with South Dakota. We'll save that for later. Repair companies. Here's the characteristics of a repair company. They repair existing structure that's been damaged. You've lived in your home for the last 10 years and something is now broken or defective, and so you have somebody come in and fix it. That's a repair. They rarely or never sell supplies or materials to customers, and they don't usually build residential or commercial structures either. Their primary reason for being is doing repair type of work. On repair companies, if they itemize materials and labor separately on the bill, they will not pay any sales tax when they are purchasing their materials because the purchases are considered to be for resale. They should give a sales tax exemption certificate to the supplier, and then they're going to collect tax on the total bill from the customer. So again, if they itemize these materials out in a definable quantity with a definable price, they can purchase those materials tax exempt to use for their repairs that they're performing. If they don't itemize labor and materials, they got to pay tax up front when they buy them from the supplier, and they still collect tax from the customer on the total bill. Iowa does end up getting the tax twice on the materials, but that only applies when you're doing repairs and you are not itemizing the materials and the labor on the invoice to the customer. Fourth one we have, manufacturer contractors. This type of business is our fourth entity that we have in Iowa. They may sell to contractors or other consumers. If they do, that's simply a retail sale. They're going to collect tax on the gross receipts. If they do make some retail sales, they must have an Iowa sales tax permit. Assuming they're located here in Iowa, they will have a retail sales tax permit. If they're located outside the state of Iowa and they have nexus here, they would have a retailer's use tax permit. That's the type that they would have. If they may also sell their products, or they may use the products in a construction contract. So it depends on what they're doing with these items that they have. If a business is primarily a manufacturer, okay, and they are going to use these materials to perform a construction contract, Iowa tax is going to be due on the fabricated cost of the materials. So that takes into account all of the overhead used to manufacture these particular items. Things such as materials, labor, power, transportation to the plant, other overhead. All of that is involved in the fabricated cost. If the business is primarily a contractor, meaning they maybe manufacture things, materials, to use themselves in a construction contract, they're going to just simply compute tax on the cost of raw materials. So it depends on circumstances as far as figuring out the Iowa tax responsibilities if you are a manufacturer contractor. When a manufacturer contractor does some new construction type of work, they do not collect tax from the final customer. Just like our construction contractors, retailer contractors, whenever they're doing new construction, they don't collect any tax from the customer either. When they're performing a taxable repair service, okay, taxable labor, taxable service, they can withdraw materials from inventory tax-free, and then they're going to collect tax from the final customer on labor and materials. Again, assuming the final customer is a taxable customer. When they're going to do a construction contract outside of Iowa, such as if they were going to withdraw materials from inventory and take them over to South Dakota to perform a construction contract there. There is no Iowa sales or use tax due on those materials in that situation. Again, Adam may have something to say about South Dakota, but there's no Iowa liability in this situation as far as sales or use tax is concerned. Okay, what about tools, equipment, supplies, materials? These are the types of things that you are going to owe tax on because these are things that are part of the items that you use or consume in your type of business. So just a few examples that we have up here are some things that you would owe tax on. You're not reselling these to the customer, you're using them or consuming them in the course of your business. So you do owe us tax on these things. Some other examples of some building materials and supplies. You can read our laundry list there. Typical building materials, could be things like concrete, could be lumber, those types of things. These are just examples of building materials and supplies. And if you are using them in a construction contract, you're going to owe some Iowa tax on them. What about machinery? Well, many of you in this type of business, you've got machinery and equipment to be able to use in this business. We've got a rubber tire backhoe, a picture of one here on the slide. We do have in Iowa, we do have an excise tax on certain machinery. And this is straight from the Iowa code. What type of machinery are we talking about? Self-propelled building equipment, pile drivers, motorized scaffolding, or any attachments which improve the performance, safety, operation, or efficiency, and including replacement parts. So for instance, we got a backhoe here. That's an example of something that would be subject to the 5% excise tax. There is no sales tax on this transaction. It's just 5% excise tax. No local option sales tax applies either. You've got other things that you may use. You have other equipment that is not as described in the previous slide. Maybe you've got something like this little portable cement mixer we have here on the diagram. You could have also possibly hand tools. These types of items, when you buy them to use in a construction contract, you're going to owe Iowa sales tax on them. And if you purchased them, took delivery in an area that has local option sales tax, you're going to owe that tax as well. So it's either going to be 6% or 7%, depending on the place where you're taking delivery of these other items that were not listed as being subject to the excise tax. So hopefully that clarifies things for you. The bottom line, though, you are the end user of these items, so you do owe some tax on them. Please note that any of these items that are rented, if you go to the rental place and you're renting something to use on a job, as long as it is going to be used for new construction type of work, the rental payments are going to be exempt from tax. How do you not pay tax on that? Well, you've got to step up to the plate. When you're at the rental place, you've got to tell them, hey, I'm a construction contractor. I am renting this equipment to use in a construction contract. I do qualify for exemption. Here is my exemption certificate, and you would give that to the to the rental place. If you don't say anything, the rental place is going to charge you tax. Okay, so it's up to you to speak up and tell the vendor that you are in fact tax exempt. Give them proper documentation in order to claim your exemption, and that is how you will not pay tax on these types of rentals. Okay, stepping back just a second, is labor taxable in Iowa? Well, if you've been to one of my webinars before on sales and use taxes, we've talked about this quite a few times. In Iowa, only certain enumerated or taxable services is taxable in Iowa. We've got information on our website, which I can show you here in just a little bit. But some examples of some different labor that's connected with the construction industry. We've got electrical repair and installation is on there, welding, roof shingle and glass repair. These are just some examples of taxable services, okay? Remember, in Iowa, services are exempt from tax unless specifically listed as being taxable, okay? So, labor is going to be taxable if it's specifically listed and it's used to perform a repair of either tangible personal property or real property. In this diagram here, we've got a picture of a guy up there. It looks like he's doing some roof repair. Roof repair is a taxable service in Iowa, so that's something that will be subject to tax. The labor is going to be taxable. We have a big exemption on labor in Iowa if it is connected, if it is on or connected with new construction, reconstruction, alteration, expansion, or remodeling of real property or structures. There's an exemption for that. So what am I saying? Well, if you are going to build a new house, you've got a carpenter that comes over to do some carpentry work. Carpentry is one of our taxable services. You've got an electrician that comes over and does some electrical work. Electrical installation is another of our taxable services. Those services would normally be taxable, but since it is connected with the new construction of your new home, the labor is going to be exempt from tax. Okay? So hopefully that clarifies things for you. Again, labor connected with new construction, exempt from tax. What's the difference between repair and new construction? Well, it does make a difference as far as Iowa tax is concerned. Our definition of repair would include mending, restoring, maintaining, replacing, or services. You're restoring an existing structure that has been damaged. So I like to think my kids are getting older now, so they don't break things as much as they used to. But for instance, the kids are always out playing ball in the yard, especially when they were younger. And most people that have kids at one time or another, a kid is going to knock a baseball or throw something through the window. When you have someone that comes out and repairs that broken window, that is the taxable repair service of glass repair. So again, that's an example for you. When in doubt, if you're not sure if something is new construction or if it is a repair, you should treat it as a taxable repair. If that's found later to be incorrect, we can always give a refund. An IA 843 is the Iowa claim for refund, and that will allow a person to get a refund back on sales tax that they paid in a situation where they did not owe it. Another example, again, we gave the broken glass or window example. We also gave an example a little earlier too of the person up fixing the roof. If we have a damaged roof shingles, that's an example. If something is defective, your garage door or your garage door opener maybe isn't working properly, you're going to have that replaced or repaired. That's an example of a taxable repair situation. Replacing some kitchen cabinets that are broken or defective. Replacing a water heater, furnace, or central air conditioning compressor. If it is broken or defective, that's going to be an example of a taxable repair if you do replace that item. Again, the difference between repair and new construction, if something is considered new construction, and I use that term, and it means all of these things. It means new construction, it means reconstruction, alteration, expansion, or remodeling. I generically call those new construction. What this means is the labor is exempt from sales tax on real property and structures only, not on tangible personal property. So what I'm trying to say here is if you are doing some type of new construction, there is no tax on the labor, as we discussed a couple slides ago. If it is a new construction contract, as we've said several times, you acting as a contractor, you're going to have to pay tax to the supplier for the materials used in that contract. You do not charge any tax to the customer for labor and materials when you're doing new construction. So again, the last slide we kind of talked about taxable repairs. This slide, we're talking about new construction type of work. Examples, new construction. If you're building something that maybe did not exist before, let's say that you're going to build or add a garage onto the home. That's an example of new construction. Adding a deck onto an existing home. Replacing the entire roof. That's an example of new construction as well. Adding a new room. These are just some different examples of what we would consider new construction. Again, when I say new construction, I mean that you, the contractor, owes tax on the materials. You include that in your price to the customer, but you collect no tax from the customer for labor or materials. Example of reconstruction. Reconstruction, maybe there has been an existing building that's been damaged by fire, flood, or some other disaster of some sort. Maybe the tornado came through and blew half the house away. If you're going in there and you are fixing that up after this disaster took place, that's an example of a reconstruction. We're talking some structural changes here. Reconstruction or remodeling. I just want to clarify this in case we have any mechanical contractors out there as well. If you are replacing any of those mechanicals that we have listed here on the slide, could be a water heater, water softener, furnace, central air conditioner, if it is not defective, okay, that's an example of reconstruction or remodeling. What do I mean by that? Give you an example. My parents lived in the same house forever. They have a furnace. The furnace is working just fine, except it was starting to show its age. It wasn't as efficient as it was when they put it in 20-some years ago. So my dad decided to get a new furnace, so he would get a high efficiency one. The old one worked fine, but they were replacing one that was not broken or defective. That is an example of reconstruction or remodeling because it was not broken or defective. So hopefully that clarifies the issue for you mechanical contractors out there. Some more definitional types of things for you, some examples. Alteration, adding on a new room, by building interior walls. Think of the room that you're sitting in right now. If you wanted to make that into 2 rooms, so you built a wall down the center of it, that would be an example of an alteration. You are making a structural change to the room by building a wall in there. Alteration or remodeling would include these things as well. These are just examples, okay? Replacing kitchen cabinets that are not defective. Your old ones are working fine, but they're outdated. So you decide, hey, I want to get new cabinets in the kitchen. That's an example of an alteration or remodeling. Paneling, we've always treated that, if you're paneling existing walls, that's been treated as alteration or remodeling work as well. The same goes for laying a new floor over an existing floor. Those are some more examples of alteration or remodeling. Expansion is pretty straightforward. That means that we've got a building and we're going to add on a new wing, or we're going to put some type of an addition on the back of your house. That would be an example of an expansion. So again, these are just some examples for you to follow through. Other things that we look at. We've got a few different items up here. An example that I wanted to mention was capital improvement. For our accountants that are out there, we like to title things, don't we? We like to capitalize things or expense things. Well, we don't care how you title it. That's not going to make a difference as far as tax is concerned. We're going to look at the project to see what actually happened before we decide how it's going to be taxed. So just because something is capitalized for accounting purposes, that does not have a bearing on Iowa tax. So that's something that we want you to avoid, just using terminology for different projects. Something else, another example here up at the top, it mentions about the timing. If you were to build a new house and your house, the construction was done and you moved in January. Well, around here in Iowa anyway, in January you probably can't do too much landscaping work or planting grass seed and that sort of thing. So if you wait until springtime before you do that work, we would still say that that labor is connected with the construction of your new home. So again, timing is something that we may look at. Now, if you wait until you save up some money so you can do it up really good 2 years down the road, we're going to say no, that's not going to be connected with the new construction. You've already been living in the home. You've had 2 years. We're going to say that's not connected with the new construction of your home. So just a couple of things to consider. Alrighty, do any of you ever do any work for various non-taxable customers? In Iowa, we have what are called designated exempt entities, and it only includes the entities that we have up here on the screen. This would include, the most common ones would include governmental entities, city hall, the county. Those are some examples of designated exempt entities. There's some others up there as well. Nonprofit hospitals are not considered to be designated exempt entities. Okay? How does this work? Well, these entities are exempt from sales tax. However, you are a construction contractor and you are not exempt from sales tax unless the designated exempt entity gives you the proper documentation. If they do, then you, the contractor, can get your materials tax exempt when doing work for these designated exempt entities. If they choose designated exempt entities when they're putting out bids, they can issue you a special exemption certificate so that allows you, being a contractor, to get the materials tax exempt for this job only. The special exemption certificate will allow you to purchase materials tax exempt or pull them out of the inventory with no tax being due. Our website has more information on these designated exempt entities. Now, as far as getting a designated exempt entity exemption certificate, this is not something that you or I can just get into the website and print these things off and go out and buy materials and not pay tax on them. This is something that has to be issued by the designated exempt entity. They've got a place that is secure where they can get into our website, they can register the contract with the Department of Revenue, they tell us who they are, what their project is, who they hired to do the work, what your federal ID number is, and all that good stuff. And the designated exempt entity will put in the information in our website and they will print off a special designated exempt entity exemption certificate. It says designated exempt entity exemption certificate in the upper right-hand corner. And again, this is a special certificate. You and I cannot just go into our website and print these off. These are something that has to be issued by the entity. You give these or give a copy of one of these to the supplier, and the suppliers are going to keep these in their records for at least 3 years in case they're ever audited by the department. What's the benefit of doing things this way? Well, if the contractor does not have to pay tax on their cost of materials, it's going to result in a lower bid price. When they are bidding on the project, their cost is going to be lower, so that's going to be a lower bid. Another thing, if you've ever tried to get refunds going after the fact, or if you've ever had to do a contractor statement, governmental entities before this designated exempt entities scenario came about, the contractors had to pay tax up front. The contractor had to provide a contractor statement to the governmental entity or the exempt entity, and then they had to apply for a refund to get a refund of the Iowa tax the contractor paid. This avoids all that paperwork. This is really something that makes things a lot smoother and a lot clearer. So, just to summarize things just a little bit for you as far as Iowa is concerned, we do have 4 types of contractors. We have the construction contractor, we have the contractor retailer, we have the repair company, and we have the manufacturer contractor. You need to pick out which one of these types of entities you are going to be for Iowa tax purposes. It does make a difference on when you pay tax to the department, when you pay tax on materials and that sort of thing. It does make a difference. Pick one. Don't change unless your business changes. So what I mean is we don't want you changing between contractor, then you're a contractor retailer for the next job, then after that you're a repair company. Pick one status, stick with it unless your business significantly changes and that warrants a change to a different type of entity. We went through, we briefly touched on the sales tax for each type of contractor. We covered the materials, we covered equipment, we covered labor. We gave a few examples of some differences between repairs and construction. We also talked about designated exempt entities as well. Just stepping back one more time to reiterate, when you are acting as a construction contractor, you owe some Iowa tax on your materials in all situations except a designated exempt entity situation. In those situations, those designated exempt entities should be telling you up front before you ever bid on the job. They should tell you, hey, we are a designated exempt entity. Do not figure any tax on your cost of materials when you are placing your bid. If you get the bid, we will give you proper documentation so you will not pay tax. A question that comes up frequently is, this is not unusual, I get this a lot, that a nonprofit organization will hire a contractor to do some work. And the contractor will say, hey, I'm doing work for a nonprofit organization. How do I not pay tax on my materials? The answer is you cannot. You must pay tax unless they are a designated exempt entity. If they are, they will give you proper documentation. So something to keep in mind. We don't want any of you being a contractor to get in trouble. If you somehow buy materials and don't pay Iowa tax on them when you're doing work for a nonprofit, the department would frown on that if we catch up with you. So again, we don't want you to get in trouble. Make sure that you're doing things properly. Okay, a little bit more information. We do have a booklet specifically for construction contractors, and you can get that on our website. If you go to our website, I'll show you that here in just a minute, you can get our Contractor's Guide. That is a publication that covers all of this information I've discussed here today. Also gives you some more detailed information as well. If you're not sure about something, you have a question, you want to talk to somebody, give us a call. Our taxpayer services number is open from 8 to 4:15, Monday through Friday. Give us a call and we'll be happy to talk you through it. You can also email us if you'd like. Our email address is listed there, idr@iowa.gov. And depending on your question, I may be one of the folks that responds to your question. I am one of the folks that answers emails. There's quite a few of us that do, but I may be one that responds to you. So by all means, check out our publication, call us if you need to, shoot us an email if you need to. We'll try and assist you the best we can. As promised, here's our website. It's tax.iowa.gov. And this is basically where you go for about everything in the world of tax as far as the Iowa Department of Revenue is concerned. But we do have a link on there that you can go to our publications. We've got publications for various tax types. You want to get to the publications that are involved with construction in this particular example. So I get into the sales and use tax publications and you will be set. We also have email updates. You can subscribe to these. They don't cost anything. This replaced our old e-list newsletters that we used to have. Subscribe to our email updates. This will keep you informed if there's any changes or anything that comes up that you need to know about. You can subscribe to it. You can cancel it at any time. It's a nice feature. As I'm fond of saying, I would rather have the information and not need it than to need the information and not have it. I subscribe to all of our automatic updates, even though some of them are under topics that I don't really work with, but I figure I can delete them. If it's something I don't need, I can delete it. So by all means, it's a good thing to have. Here's our list of the different topics that we do have. Again, subscribe to one of them, subscribe to all of them, subscribe to none of them. It's up to you. It is just another tool for staying in contact with the Department of Revenue as far as tax issues are concerned. The department is also on Twitter. If you've been to one of my webinars before, we always give you our Twitter information. We have 3 different Twitter accounts. We put out tweets every working day of the month. Again, another way of staying in touch with the department as far as tax issues are concerned. Like us on Facebook. We need more friends. The department is on Facebook. Go on there and like us. Again, we need more friends. We don't have a lot of people that are liking us on Facebook, so please do so. Another way to stay in touch with the department, again, we put out information every working day of the month. So another place to stay in touch with the Department of Revenue relating to Iowa tax. As always, just a reminder, the purpose of this webinar is hopefully you're going to learn something. We're trying to put out some information here today. If you are involved in an audit or a protest, you must work through your contact with the department. This in no way has anything to do directly with your audit or protest. This is not the platform to get involved in those issues. So by all means, hopefully you're getting some useful information out of this today. This is going to conclude my information that I had as far as Iowa tax is concerned. I'm going to turn things over to Adam, and he's going to cover things from the South Dakota point of view as far as tax is concerned.
Thank you, Terry. Once again, my name's Adam Maska. I'm a revenue agent here in the Yankton, South Dakota office. Let me get the slides going here. There we go. All right, in South Dakota, we have what we call a contractor's excise tax. And what... There we go. All right, as far as my presentation goes, it's similar to Terry's, giving you the very basics that we can go off of. Not going to cover everything that's going to apply to the contractor's excise tax. If you have a certain situation, I request that you get a hold of somebody within the Department of Revenue, and we can go over your specific situation. Basically, what I'm saying does not carry any regulatory or statutory authority. And basically the laws are always changing, so just keep aware of that. Get in touch with our newsletters, our tax releases, our tax facts, just so you can stay informed of all the latest information. So who needs a contractor's excise tax license? Basically, that's anyone who enters a contract for construction services listed in Division C of the SIC manual. Also, anyone who engages in services including construction, building, installation, or repair of a fixture to real property, and anyone who engages in repair or remodeling of an existing real property or the construction of a new project. Main thing to keep in mind here, it doesn't say anything about entering the state of South Dakota. It's basically entering a contract for construction services in South Dakota. A lot of times, out-of-state companies will subcontract a work in South Dakota. They may not even enter the state. They are in need of a contractor's excise tax license, even though they don't step foot here because they have the contract for construction services in South Dakota. One thing to keep in mind, we just need one excise tax license for each business location and not for each specific job. You must be licensed before starting work. That applies for the contractor's excise tax or the sales tax licenses. Like I said, you do not need a license for each construction site, just the locations in South Dakota. As far as having the license, there is a law in the South Dakota codified law that says no purchasing agency may award a contract for construction to anyone who does not have an excise tax license. So one thing to keep in mind if you are bidding on any projects, that you will need to have the excise tax license ahead of time to get that contract. What is the excise tax? Ultimately, it's a tax on a contractor. It's a 2% tax on a contractor's entire gross receipts of all prime contractors who are engaged in the construction services or realty improvement projects in South Dakota. The 2% tax on gross receipts, there's two different types of excise tax. We have the regular excise tax, and then what we have called the alternative contractor's excise tax, and that's the 2% tax also on qualified utility projects, and we will get into that later specifically for those situations. The main thing here is that no prime contractor is exempt from contractor's excise tax. This is a true gross receipts tax on a contractor. It does not matter who you're working for. You could be working for a city, the state of South Dakota, the federal government. Ultimately, the customer does not matter. As far as the tax liability, it all falls on the contractor. So something to keep in mind there is no one is exempt from excise tax. You could be doing work for a school, a church, a nonprofit. If you're a contractor working in South Dakota, you are subject to the contractor's excise tax. How to determine if a contract is subject to the excise tax? One thing is you can always look in the SIC manual and see if it's listed in Division C. There are a couple exemptions to that rule, one being floor laying, and we'll get into that later, the specific floor types which are exempt from the excise tax. And then locksmiths and locksmith shops are also not subject to the excise tax. They would fall under the sales tax instead. If what you're doing does not fall into the Division C of the SIC manual, Couple questions to kind of keep in mind. Do the services entail the construction, building, installation, or repair of a fixture to realty? Some more questions of what is a fixture? A fixture is anything that's annexed or attached to real property. It could be hardwired in, wired directly, bolted down. It's something to be permanent. It can be plumbed in, and basically it's adapted to fit the real property. It's not just a plug-in, say like a TV where you can just plug it in. This is something that's hardwired in. It's not intended to go anywhere. You can't necessarily move it. And that's kind of the basis of the excise tax along with the SIC manual. Gross receipts. The 2% tax on the gross receipts includes any labor, includes excise tax. So if you are charging for the excise tax, that becomes part of your gross receipts as well. It includes any indirect payments. You know, if the bank, let's say you have a bank loan, and they're paying for the materials directly, even though those payments aren't run through the prime contractor, those are part of the contract. Those are indirect payments. Those are included in your gross receipts. Any awards or bonuses are included. Any retainage, draws on loans, sales or use tax on materials is also included in your gross receipts. Sweat equity. So basically, if the homeowner or the project owner does some work themselves on top of the contract, that deducts the contract. That's also included in your gross receipts. You don't get a deduction for that. Barter transactions is also included. Any building permits or fees that you may pass on to the customer in the contract are also included. And then the big one is any owner furnished materials. That's something we'll get into later. But ultimately, you're given the contractor is given those materials. That becomes part of your gross receipts, just like they're receiving a payment for it. No deductions for any subcontractor payments. Basically, whatever contract the prime contractor has, that's the gross receipts amount. You can't deduct out for what you're paying to subcontractors. You can't have any deductions for any costs of your services or any labor. Any taxes. I just explained that earlier. If you're charging for the excise tax, that becomes part of your gross receipts. If you're charging for sales or use tax on materials, that's also part of your gross receipts. And then there's no deductions for any expenses or losses on the project. And I kind of talked about this earlier as far as indirect payments. Amounts paid to others, material suppliers is the big one, or subcontractors on behalf of the prime contractor. Those are considered gross receipts of the prime contractor, even though the payment is not funneled through that exact contractor. They're still responsible for the receipts on those. Penalties and damages are also subject to gross receipts. They may not be deducted. So if a contract, let's say you have a contract for $100,000, you were late on the finishing it up, it cost you $5,000. Ultimately, you may not have, you've only been paid $95,000. You cannot deduct that $5,000 in penalties. You would owe the $100,000. You would owe the 2% on that $100,000. There's no deductions for penalties or damages. Same thing goes if you were awarded a bonus for finishing early. That's also included in your gross receipts. Any barter, trade between services, supplies, there is a value to that barter, and that is also subject to contractors' excise tax. Building permit fees, if those are passed on to the customer, those are also included in your gross receipts and cannot be deducted. One thing to get around the tax that's being collected, the excise tax, since it's included in the gross receipts, we have come up with what we call a bid factor. And this is a number we would have each contractor put on the invoice and what they would actually charge out to the customers. There are some forms, online calculators that you can click on there, or you can get a paper version, and it kind of explains how to calculate that. But the main thing is, instead of charging a 2% excise tax, we would request that you charge them the 2.041%. when you're doing your bid and when you're collecting. And then when you go to report it to the department at the end of the period, then you would report it at the 2% rate. And this basically makes up for that tax on that excise tax that's collected. And here's an example of why we have that bid factor. You can kind of look through it here. We have $10,000 worth of materials, which we are saying the sales tax was paid at the purchase, so we don't have to worry about the sales tax on materials. $5,000 worth of labor. They collected $1,500 worth of permits, inspections, other miscellaneous charges. So ultimately their grand total charge to the project owner was $16,500. By doing the bid factor, we put that 2.041% in to get a total excise tax due of $336.77. So ultimately the gross receipts for this project was the $16,836.77. And if you kind of look to the right, if you did not use the bid factor and just ran the straight 2% excise tax, ultimately you would have collected $330. When you go to report those gross receipts on the excise tax return, that's $16,836 at 2% would have made $336.74 due. So ultimately you're short collecting that tax. And you get into some bigger contracts, that can add up pretty fast. So something to keep in mind, definitely use that bid factor, and that's kind of why we use it. Owner furnished materials is pretty self-described. It's basically any material that's supplied by the owner to the contractor. The prime contractor ultimately owes the contractor's excise tax on the value of that material. There is an exception for qualified utility projects. One thing to keep in mind, the state and use tax is due on the cost of material if the contractor does not have any documentation that shows the sales or use tax was paid by that owner. So something to keep in mind if you are receiving owner furnished materials, especially if you're working for sales tax exempt entities. More often than not, they're going to buy materials without sales tax because they are exempt from that. But when they're given to the contractors, similar to what Terry said, all contractors are considered the user and consumer of construction supplies. So even though you may be working for an exempt entity, sales tax exempt entity, once they give those materials to you, it is no longer exempt. You are the end user of that. The value is included on your excise tax return on line 2, and we'll kind of show you that here. So here's a typical example. Let's say a homeowner buys a door for $500, hires a contractor, and pays him $500 labor to install it. Ultimately, the taxable amount is the $1,000, even though the contractor may consider his gross receipts only $500 because that's what he's taking in for payment. But ultimately, he's the end user of those materials as well, and that becomes part of his gross receipts. So he would owe the 2% or the 2.041% on the $1,000, and it kind of shows the actual invoice there. And then if you look down, it kind of shows the return as well. His gross receipts was the $520.41. That's what he got the check for. But ultimately, he had owner furnished material of $500. Those get added together, and that's what the 2% rate is calculated at. One thing that could change there is if that owner furnished materials did not have any sales tax charged when the customer purchased, then the contractor would owe the applicable sales tax rate or use tax rate on that $500 wherever he's using that product at. Difference between prime contractors and subcontractors. Prime contractor is anyone who has the contract for construction service. One thing to consider here is, depending on the project, there may be multiple prime contractors. If I'm building my own house as a homeowner, if I go to each contractor, if I go to a plumbing contractor, if I go to a framer, if I go to HVAC, and have a contract with each of those units, each of those contractors, then ultimately they're going to be their own prime contractor. There's not one general contractor. I'm acting as my own contractor. So you just kind of have to follow the contracts on most jobs. Subcontractor, most people are familiar with that. They basically subcontract to perform part or all of the construction services from the prime contractor. The main thing here, to be considered a subcontractor, you must receive a prime contractor's exemption certificate. Without that, ultimately you are considered the prime contractor. Here it kind of shows the differences between the tax liabilities of a prime contractor and a subcontractor. You can see they both need an excise tax license. The prime contractor always contracts with the owner, while the subcontractor contracts with a prime or another subcontractor if it's a larger project. The prime contractor will report the gross receipts, including the owner furnished materials. They would also owe the sales or use tax on materials if not previously paid. They are responsible for giving prime contractors exemption certificates to any subcontractor that's hired, and then they are going to pay the contractor's excise tax. The subcontractor, if they get that prime contractor's exemption certificate, the main thing they need to keep an eye on is any sales or use tax that they would owe on any materials that they bring to the project if tax was not previously paid on it. They must receive that exemption certificate, and then ultimately they would not owe the excise tax if they have a properly completed certificate. So that certificate is the main thing that any subcontractor in South Dakota would want to have. It's basically similar to the sales tax exemption certificates. You want to keep it on file in case you're ever audited or reviewed. Basically shows why you didn't charge the excise tax on that particular project. Ultimately, it's the prime contractor's responsibility to issue all exemption certificates. Even if another subcontractor hires another subcontractor, the prime contractor must issue the certificate. It cannot come from that previous subcontractor. The certificates cannot be issued to material suppliers or anyone who provides sales taxable service providers. Carpet laying is probably the big one. Any carpet laying is subject to sales tax, so they cannot give that exemption certificate to anyone who's doing a sales taxable job. And then the main difference on those qualified utilities, projects, and like I said, we'll get into that a little bit later, they cannot be issued. There's no exemption certificates on those qualified utility projects. On the certificate, it must show the prime contractor's number, the excise tax number. Main thing is the project location and a description. You don't want to issue a blank certificate. You want that specific project listed on that certificate. Otherwise, if you do list a blanket certificate, any work that subcontractor may do ultimately could come back to the prime contractor for that one specific job because the job isn't listed specifically on that certificate. Certificates, like I said, must be issued by the prime contractor. They can't come from a government entity, the state of South Dakota, any corporation, any owner of a project, unless they are the prime contractor themselves. And that would be when they're with the intent of selling or leasing a property. That's when they become the prime contractor. Here's a quick look at that exemption certificate. It's usually just a little half-page sheet of paper. Shows the prime contractor's name, their excise tax number, and then down at the bottom it gives you a chance to put in the subcontractor name, their excise tax license number, and then just a short project description and location, and then a signature at the bottom. Put it in the subcontractor's file. They file it away and shows why they are not charged the excise tax on that project. As far as sales and use tax goes, contractors are responsible for paying all sales and use tax on all products or services used in South Dakota. This includes any materials, equipment, tools, supplies used. And then if the supplier is not licensed to charge the tax in South Dakota, ultimately the contractor would owe use tax based on where they received the product. The sales tax and use tax can be reported on the excise tax return. when the contractor receives the product. A couple different scenarios. If the contractor picks up at a store location, that's where the sales tax applies at. If they have it delivered inside South Dakota, the delivery point is where the tax is due. This is where we run into some issues down, especially like in the Dakota Dunes, North Sioux City area. If a contractor is working on a house, let's say in Dakota Dunes, that's a 4% state tax in South Dakota in that location. If they have product delivered in from an out-of-state company, and let's say it's an Iowa company that's charging 7%, since that product was delivered into South Dakota tax would ultimately be due, even though they may have paid 7%. If they go over into Sioux City and pick up that material and pay the 7%, they bring it back into South Dakota. We give them reciprocity for that because it was paid at the correct location. So one thing to keep a close eye on is especially where that product is delivered to or picked up, and if the correct rate is being applied. And the same thing goes. It applies to delivery and handling charges and the cost of material. Let's say a contractor has that material delivered into Dakota Dunes at the 4% rate. That's what they pay. But they take that material into North Sioux City, which has a 6% sales tax rate. Ultimately, they would owe that additional 2% tax because it's higher than what they originally paid. So keep in mind of where that material is going, where it's delivered to, where it's picked up at. Use tax is collected as part of the gross receipts, so you can pass that tax on to the customer. There is a specific state law that says that can be passed on to any entity, private or public, so that can be included right on your invoice. So the same invoice kind of as before. In this case, they owed 6% use tax on that material since it was not paid previously, and it kind of goes through the invoice, shows the bid factor, what was should have been charged of the excise tax of $318.40. And then ultimately, since it's owner furnished material, on the right hand side it shows what the actual invoice is for, so you're charging them for the labor, the $600 use tax on the material that was provided, and then the excise tax. And then I think the next screen is how you would fill that in on the return. The contractor's gross receipts was the $5,918. They received $10,000 worth of material from the owner. That's reported on line 2. That gets carried down to line 5, and the 2% tax is paid on that. And then the use tax shows up on line 6 and line 10 at $10,000, and it's the 4% state tax. And in this case, the city of Sioux Falls had the 2% tax, since that's where the project was on this particular example. Out-of-state purchases, I kind of talked about this previously. If material and equipment are delivered into South Dakota tax is due, even if the supplier charges another state sales tax. If it's picked up properly in another state and the tax is paid, credit is given for that tax paid. If for some reason the tax previously paid is less than what we would charge in South Dakota, you would owe the difference in use tax at that location. Same thing goes with equipment. Any equipment purchased for use in South Dakota is subject to the South Dakota tax. If you're bringing in used equipment from another state, if you haven't paid sales tax or use tax on it, you would owe use tax on it if that equipment is less than 7 years old. And what we base that on is the fair market value of that piece. So something to keep in mind if you're bringing in equipment also into South Dakota if no sales tax was paid on that previously. Materials removed from inventory in South Dakota, use tax is due when that material is taken out of the tax, unpaid tax inventory to use on a construction project based on where material is taken out of inventory, not on the location of where the project is used. So if a contractor has a warehouse in, let's say Yankton, they pull that material out, they would owe the 6% Yankton tax on their cost of those materials. Additional use tax is due if it's moved to another city that has a higher rate than the original rate charged or the use tax paid. And like I said, use tax can always be reported on the contractor's excise tax return. In South Dakota, on our services, we have a very broad-based sales tax. Different from Iowa, where basically everything applies, tax applies to all services in South Dakota unless they're specifically exempted. So a lot of services that are not charged tax in other states would be subject to sales or use tax when used in Iowa. There's a list here: accounting, attorneys, carpet laying, snow removal. A lot of different services are subject to sales tax or use tax in South Dakota. As far as where that tax is due, it's basically where the provider or where the service, where the person receiving the service, where they're receiving it, where the property is delivered to a customer. So if you're getting repairs done in South Dakota, that's where the tax applies. Same thing goes for the delivery of product or the picking up of product. That's where the tax applies. The property location where the service was performed. So if they're doing some carpet installation in Dakota Dunes, South Dakota, that's where the tax applies. Same thing goes where other services go. It's where the customer receives the service ultimately. So that's where the use tax is based on. Ultimately, is where it's used by the consumer. Some specific examples of sales tax and use tax issues. If we have some equipment that's being leased or rented, if it's without an operator, if they're just using that piece of equipment, the sales tax applies first on the first payment where the possession is taken, and then ultimately the other payments are taxed at the primary location of where the equipment is being used at. If that piece of equipment, like a skid loader, let's say if they're also including an operator, then the tax depends on what they're actually doing. If they're doing some dirt work and moving around some dirt or digging a basement, then ultimately it's an excise taxable invoice. They're providing an excise taxable service. Let's say they hire a forklift operator with a forklift just to move some pallets around, help load a vehicle. That's a sales tax invoice. They're not providing any construction. They're not doing any repairs or anything to real property or any fixtures to real property. So basically it just depends on the situation on those instances. Construction managers, the main difference here, whether it's subject to sales tax or the excise tax, it all depends on kind of the contracts and who's paying who. If you're a construction manager and your contract does not include any construction, and you're not in charge of paying the contractors yourself, then ultimately you could be considered a construction manager and subject to sales tax on your invoices. The minute you get into doing any sort of work, have the contracts with other contractors, then that's where the excise taxable invoices apply. You become the prime contractor in that situation. You're taking the receipts from the owner and you're hiring subs. The contract isn't directly with the project owner anymore. You've taken over that contract, and your receipts would be subject to the excise tax. And then you would, like I said before, the prime contractor would always issue the exemption certificates to the subcontractor. So that construction manager, in this particular case, would be subject to the excise tax if they're working those contracts, and then they would issue those certificates to all subs, so they're not charged excise tax from them. Some different examples of realty improvements: heating and cooling, plumbing, concrete work, remodeling, electrical, carpentry, painting and wallpapering are all subject to excise tax. I'll kind of go through these pretty quick. If you deal with any of these specific industries, feel free to contact the department because there are some more details that could apply. But basically the excise taxable in the HVAC industry falls under any installation of heating, central air, ventilation units, and any repair work done to those units as well. Sales tax is more on maintenance items, services, so cleaning, if you're changing a filter, calibration, cleaning the ducts, just doing some general maintenance, then it would be subject to sales tax on those particular projects. What's the difference between repair and maintenance? Excise tax applies when you're basically replacing parts or fixing parts. So as far as an HVAC example, if you have an HVAC unit that the blower motor has gone out of, you go in, replace the blower motor, that's an excise taxable job. You're replacing parts, you're fixing something on that piece of equipment. If you just have a maintenance contract and go in and calibrate it at the beginning of the season, change the filters for them, you're not replacing any parts, you're not fixing any parts, so that's where the sales tax would apply. The main rule on those, if installation is subject to excise tax, then ultimately any repair is also subject to the excise tax. Service or maintenance contracts are subject to sales tax. If you're contracting to clean or calibrate and do not have any installation or repair to real property, main thing here is parts and labor. There's no sales tax on that because ultimately the contract was taxed itself, so you can buy those parts for resale on that example. Another industry where it's kind of mixed, you get into some sales tax and excise taxable work, is the landscaping industry. So sales tax applies to any landscape design, spraying and fertilizing, mowing, any just sort of ornamental tree planting, flower planting, seeding or laying sod. And then you get into more of the hardscaping, which would be subject to the excise tax. So laying bricks, installing sprinklers, any fountains or ponds. Then you get into some more of like the excise taxable work where it includes stump removal in fields, sidewalks, shelter belt clearing. And one thing to keep in mind here, there's a lot of times that these contracts will include both of these things. You'll have, let's say you install underground sprinklers, which is excise taxable, but you also lay some sod afterwards. So the main thing is to kind of look at the primary contract. If the main thing was to install the sprinklers and you end up laying some sod afterwards, the main thing there was the excise taxable sprinkler installation. That was the entire contract. You can invoice those out. You can itemize those and charge the excise tax on the sprinklers and charge the sales tax on the sod. Or if it's the general rule we go by is if the contract is 25% or more excise taxable or sales taxable, then you can basically make that whole contract one or the other depending on what's greater. Another thing, another industry that's it blurs the line between sales tax and excise tax is the flooring industry. Like I said, most of the flooring is sales taxable: carpets, hardwood floors, vinyl floors, wood flooring, any linoleum. Those are all subject to sales tax. When you get into the excise tax, it's specifically to like ceramic tile, marble flooring, the epoxy flooring, and terrazzo. So something to keep in mind there. And then, like I said, those contracts can go both ways as well. They can be, you can have some carpet and some ceramic tile on the same contract, and the same rules would apply there. You just kind of have to figure out what you're doing more of or what the primary purpose of the contract was. As far as the gravel goes, any excise taxable work is blading or grading of the road after the gravel has been spread. You're actually using that material to create a realty improvement project. If you're maintaining a road or building a road, is excise taxable. If you're just selling gravel, stockpiling gravel, crushing it, spreading it, not necessarily blading. If you have a truck full of gravel and you take off and dump the load in the back and you kind of spread it that way, that's still sales taxable. You're not working that gravel in any way. So, snow removal, a lot of contractors will do snow removal in the winter. Those receipts are subject to sales tax based on where the service is received. You can report that sales tax on your excise tax return. Highway contractors, anyone performing work in South Dakota in the right of way of the roads, including snow removal and blading, would also need to apply for a highway contractor's license in addition to the contractor's excise tax license. So just keep that in mind. Those licenses are done through the motor vehicle division of the department, and similar to most licenses, they must be obtained before doing any work in South Dakota. As far as that alternative contractor's excise tax or the qualifying utilities, there are specific industries that fall under this tax. So electric, heating, water, gas companies, railroads, rural electric companies, telephone companies, water systems, those are all subject to this qualifying utilities tax. The main difference here between the qualifying utilities and regular excise tax, you do not owe the value of the owner furnished materials in a qualified utility project. So that's one benefit of that. The only other thing that's different would be you cannot give prime contractors exemption certificates. So ultimately there are no subcontractors. Everyone's responsible for the 2% on their own receipts. But the trade-off of that is that owner furnished material. You don't have to report that. So something to keep in mind if you do work with any of those qualified utility projects, the tax is considerably different compared to the regular excise tax. Spec builders, anyone who is building a property with the intent to sell, could also be like house flippers if you're buying a property for cheap, doing some work on it and selling it for a profit. This is also a spec builder. Some things to keep in mind here. There's some criteria to meet the spec builder. You own the land, you're building to sell, it could be new construction or remodeled, the house flipping, and you do not have to do any of the work. As long as you own the land and are with the intent to sell, you are a spec builder. So you are required to have a contractor's excise tax license. You would issue this exemption certificates just like a normal contractor would. You're going to owe the sales tax on any materials that you're using for the project, and then you're going to owe the excise tax if the building is sold within 4 years of completion. So you're going to owe it on the purchase price or the selling price of the property, but you are allowed to deduct the cost of the original structure, including any land prices. So if you, let's say a flip home, if you're buying a home for $50,000, you do some work on it, ultimately you sell it for $100,000, you're going to owe the 2% excise tax on the $50,000, the difference between the selling price minus what you paid for it. You can't deduct out any of the cost of materials. Similar to before, it's basically selling price minus the cost of the property or cost of the lot if you're building a new house. There's some other examples that fall into the spec buildings. A lot of times some of the contractors will move into the home instead of selling it. They would owe the excise tax on the amounts paid to their subcontractors at that time. Sometimes they will rent out a spec home, and that's the $100,000 rule, and I will get that on the next slide. And then ultimately, if the contractor moves into the home and then it's sold still within 4 years of completion, they're going to owe the excise tax on the selling price minus the cost of the land, and then minus any excise tax that they paid when they occupied the home. So they would get to basically deduct out what they've already paid for the subcontractors. So if you're doing any spec building work, there are some specific forms for that, and we can go over those at a later time. The $100,000 rule applies to buildings that are being built to lease for others. Main thing here is the owner is a prime contractor. They're subject to the excise tax if they have a contractor's license and they perform part of the construction. If the owner is not licensed as a contractor and they do not do any of the work, then they are not subject to the excise tax. They would just pay the excise tax to all contractors that they hire. So everyone they hire would be considered a prime contractor, and that's where the excise tax would be due. Same thing goes if that building that was leased out, if it's sold within 4 years, then they would owe excise tax on the selling price of the building minus the cost or fair market value of the land, and then they may deduct any excise tax that was previously paid when they first leased it out. Some other examples: some portable buildings, lawn sheds. Portable buildings are all subject to sales tax. Sheds sold to utility companies are subject to sales tax unless they are sold with installation on a foundation. That's kind of the key word there, is installation. If you're strictly just selling them the shed, it's subject to sales tax, but if you have that contract for installation, then it's excise taxable. Fully wired sheds, telephone switching stations are all subject to sales tax, similar unless it's sold on installation. School-built homes, if a school just builds a home in the back lot on a set of blocks, and they just sell that piece of, if they sell that home, they're selling TPP, they're selling property, it's subject to sales tax unless they're specifically building it on a site and doing installation. So that just becomes a sales taxable service. They're selling just a tangible personal property, and it's subject to sales tax. And like I said, if they go onto the owner's site and build it there, then it's subject to the excise tax. They're not just selling a piece of property anymore, they're selling an entire installed finished unit. In South Dakota, we do have some tribal land. So if you are working in those areas, just be aware of it. I'm not going to go into all the details today. But basically, we have 5 tribal governments that the state has collection agreements on. And then we have 2 that have a limited tax agreement. So if you are working on any of these collection agreement areas, just be aware that it's reported differently. Ultimately, it's probably taxed at the same rate, but as far as the return goes, it's just coded to a different location so we can get the correct governments their tax instead of to the state. So if you do work on any tribal land, definitely contact us for specific examples on that. In South Dakota, we do have online filing. It's called the ePath. We just switched that a couple years ago. It's very user-friendly. So if you're not using the online filing, I would suggest you take advantage of that. We do have an 800 number that you can call in during business hours, 8 to 5, Monday through Friday Central Standard Time. If you have any questions or assistance on that filing or paying returns online. We do take credit card payments. We just started doing that. There is a slight fee, 2.5 or 5% convenience fee for each transaction, so just keep in mind of that. But we do have that option available through ePath and through our website if you just have a payment to make and want to do it that way. Keep in mind all records need to be kept for 3 years, longer if you're depreciating your capital assets. So if you're ever audited, we can go back 3 years. So you'd want to keep those prime contractors exemption certificates. You'd want to keep your purchase invoices showing that you paid sales tax on those materials. I mean, those are the kind of main things we're going to come in and look at if you're ever selected for an audit. If there's ever any questions, definitely just get a hold of us and we can kind of suggest what needs to be kept. There's that 800 number again. We do have a business tax email that you can send in questions to and get an answer that way. Our website is listed there. We do have local offices throughout the state. And one thing that's pretty helpful is these tax facts. They have specific ones for, there's one for flooring, there's one for landscaping and lawn care. So if you have specific questions, a good place to start is there to get some answers for. Here's a list of the field offices in South Dakota. Once again, I'm in the Yankton office. Feel free to get a hold of me here, or you can always contact the 800 number to get your question answered, or use the business tax email. Similar to Terry and the Iowa Department of Revenue, we're always looking for more friends. We do have some YouTube videos from some of our other webinars on our YouTube site. We have a Facebook page. So if you want to get the latest information, you can follow us there or on Twitter. And then we do have a blog that we use to kind of keep up to date information out to our taxpayers. So definitely take advantage of all those resources. And I just wanted to thank you for your time, and thank you to Terry and Valen for all their help in getting this set up.
All right, now I'm on. Okay, I want to thank Adam and Terry for being here and everybody else who's participated. We have a couple minutes for questions, so if we just want to do one each, maybe. And then everyone needs the PDF, and I will put a document of all the questions and answers on Iowa SourceLink along with this recording within the next few weeks. So be watching for that. If your question didn't get answered, it will just check back in to Iowa SourceLink within a couple weeks. So Terry, do you want to?
Sure.
One question?
The first question that I saw was when I was speaking. It says in Iowa, new construction is not taxable to the customer. Repairs are taxable. What about remodels or tenant build-outs? I'm not sure what a tenant build-out is. I'm going to just assume it's kind of like an expansion or an addition. Remodeling and alteration, expansions, all of those things are treated as new construction. Remember earlier when I used the term new construction, it includes all of the things: new construction, reconstruction, alteration, expansion, or remodeling of real property. So it's going to apply to all of those things. When I say new construction, I mean the contractor pays tax upfront on the materials, includes it in the price to the customer, collects no tax from the customer for labor or materials. So that's how that's handled.
Cool.
We have, we scroll down a little bit. Maybe Adam can see one that's a South Dakota.
Adam, do you have one picked out that you want to answer? Otherwise, I'll just throw one out at you.
I'm not seeing any. Where am I supposed to be looking? Oh, never mind. I got it. I found some now.
Go ahead.
See if I can find one. Judy had one as far as the equipment goes. If it's brought in older than 7 years, is it taxable if sales tax or use tax wasn't paid on it? That would be correct. Anything older than 7 years is not subject to the sales tax or use tax anymore. That's kind of the cutoff date on any equipment brought into South Dakota. Got another one from Lori here that I can answer pretty easy. If a contractor comes into the state and does not show excise tax on the invoice, do they have to pay use tax on that? The answer is no. You would not owe any use tax on any excise taxable work in South Dakota. If you're hiring that contractor, they're ultimately responsible for any excise tax. You could have some use tax on any materials that you're giving them. Anything that was supplied or purchased for the project if he didn't have any sales tax paid. But his excise taxable invoice is not subject to use tax if he doesn't show it on his bill. So. Looks like a lot of good questions. There's another one from Tim Halsworth. He said, what if the owner does not provide you with an amount of the owner's supplied material? That's a common question and a good one. A lot of times the owner isn't going to tell you what he paid for his materials. In that case, what we'd have to do is just provide a fair market value of what you think you were given. As a contractor, we would hope that you'd have an idea of what you would maybe spend if you were to go out and purchase that yourself. So in that case, if they're not giving you an actual value. That's where we kind of use a fair market value as best we can.
Okay, awesome. Well, I've got 1 o'clock right on the dot, so we'll make sure that we get all the rest of the questions answered and posted on SourceLink within the next couple weeks. But again, thanks everybody for coming. Thanks, Adam. Thanks, Terry, for being with us. And there's going to be a survey after I close the presentation. If you have more questions or need to reach out to either, then that's a good place to do. So. Thanks, everyone. Have a great day.
Yep. Thank you very much.
Thank you, everyone.